Thank you for attending today. My name is Ghada Swelem. I'm from the Fintech Saudi team. Thank you for being part of Fintech Tour. On behalf of my colleagues at Fintech Saudi, I welcome you and thank you for attending today. Let me start with a quick brief about Fintech Saudi, then we can explain the tour that we're currently doing, and after it we shall start with our panel discussion. So Fintech Saudi is an initiative that was founded by the Saudi Central Bank and Capital Market Authority, aiming to support the growth of the fintech industry in Saudi. So we bring the ecosystem together. We support startups, we support entrepreneurs, we increase awareness about the fintech in general in Saudi. Fintech Saudi was established in 2018, and since then we witness a huge and rapid growth in the fintech industry. Starting in 2018, we had only 10 fintechs, and today we have more than 140 fintechs operating in Saudi. So we're seeing rapid growth. We're seeing a lot of industry contributing and building products, fintech products in the market. It is exciting time to start a fintech company. It is exciting time to get involved in the fintech industry. And this is why we did the Fintech Tour. And basically, Fintech Tour is to increase awareness about the fintech industry, bringing the ecosystem together, having the platform to speak about different topics about fintech. Fintech Tour this year is the 5th edition. We're touring around the kingdom, explaining the concept of fintech. We're visiting 11 different cities across Saudi. And we have great partners in Riyadh hosting different events, and one of them is BSF. And I would like to take this opportunity to thank them for hosting this event. And without further ado, I will give the mic to Ben. Ben will take it from here.
Thank you. Hi everyone, welcome to BSF. Who is a BSFer in here? There must be a few. There's an ex-BSFer. BSFer. Okay, good. We've got lots of people from outside of BSF, which is nice. Welcome to BSF for the first time. For those of you who've never been here before, it's our pleasure to host you. We are a long-time partner of Fintech Saudi, and we support almost every single one of their initiatives and have since their conception in 2019. This is the second year, I think, that we've done an event as part of the Fintech Tour, which is bigger and better than ever. The amount of investment that SAMA and Fintech Saudi are putting into their events and bringing the community together is amazing. Versus what we're seeing in other markets, truly the impact of Fintech Saudi is fantastic, and we're really, really thankful to be a part of it. What we're going to do today is we have an esteemed guest who I'll introduce in just a moment. We're very lucky to have him here off the global speaker circuit from a fintech perspective. And then we're going to have a bit of a panel discussion with a few other regional experts, all about the subject of open banking. Open banking is, you're all here for the reason, and you've seen the subject that we're here to discuss. One of the hottest topics in banking globally at the moment. And from early November, I think, Marlon, when they announced they finalised the implementation guidelines, it's all we've been talking about here in BSF. And I'm really happy that we get to share with you some of our ideas through the panel discussion. So before we introduce Jeff and get him on stage, it would be good to just do a quick survey of who we have in the room. So who here works in fintech? If you put your hand up. Okay, I would say a third. Who here works in banking? Okay, 5 or 6 people in banking. Anybody from the regulator? Nobody from the regulator. One from the regulator. So that's okay. You're outnumbered here. Did you put your hand up? No, okay, you were just waving at me. So there's nobody from the regulator here, which I think to our panelists is probably good news. So we have a bit of extra ground. Okay, so I'll introduce Jeff. Jeff is the global head of Fintech for Bain, a consultancy you will have all heard of, a consultancy that we've worked with in the bank over the years. And before that, Jeff was a banker, working for BNP Paribas, Lloyds Bank in the UK, and a small bank in the Netherlands, I think.
A few.
And since then did 7 years at Capco as their global head of fintech, a few years of global head of consulting at a London-based boutique fintech consultancy called 11FS, and is now the global head of Fintech for Bain. So we're very lucky to have you here. Jeff, welcome to BSF for the second or third time, I think, over the last few years. If you'd like to come to the stage, welcome, Jeff.
Thank you very much, Ben. I feel very honored to be called an esteemed speaker, Ben. Usually, when people introduce me, people cannot even pronounce my last name. So well done, first and foremost, for actually being able, let me try and fix this, for actually being able to pronounce my last name, because that doesn't happen that often. I get lots of weird variations, but I'm delighted to be here. A big thanks to Fintech and to BSF for inviting me to come here and to speak to you about the wonderful world of open banking. This is a topic that in the past couple of years I've spent lots of time in. I've had the pleasure of working with several countries around the world, from Hong Kong to the UK, to Brazil, around the implementation of open banking. My old team built the first sandbox for the UK regulator in the UK as well. And since then I've worked with a variety of financial institutions as well as fintechs on open banking, helping them to figure out what does it mean for the organization and what opportunities does open banking provide. We'll talk a little bit more about that later on. As I said, really exciting to be here. It's great to see that open banking is now a thing in KSA. We'll talk a little bit more about how open banking has been rolled out by various jurisdictions around the world. And because it's interesting to see the approaches that different regulators have effectively taken on. It's still relatively early days for KSA, but again, really look forward to speaking to you. I love giving you, I think I've been given 45 minutes or so. I hate giving lengthy, I love talking, but I hate lengthy monologues where I just have to listen to the sound of my own voice for 45 minutes. So let's try and make this interactive. If you guys have any questions, and but if you guys do have any questions, please raise your hands and I'll do my best to address them as we go. So here's some of the things that we'll look to cover in today's discussion. As good consultants do, I've got 257 slides for you. I'm only joking. Don't worry, I do not have 257 slides. But we'll talk a bit about how open banking effectively came about. What are some of the challenges? Because it definitely hasn't been, for those countries that have adopted open banking and have or are in the process of rolling out open banking, it definitely hasn't been a smooth journey. So I want to share some of those key lessons and what does it mean for KSA and for you organizations looking to benefit from and implement open banking. We'll talk a little bit more about the global perspective and the approach that different players around the world have taken. And then, I want to really dive into how has open banking played out in the past couple of years and the emergence of this new ecosystem that we've seen evolve in the past couple of years. We'll talk a little bit about how banks have responded to this, which I know there's a couple of banks in the room, so hopefully this will be helpful for you guys. Because based on my experience, a lot of banks found it really difficult to understand what open banking effectively means for them. I think my mic is a bit dodgy, but if anyone wants to fix this, then please come over. And then finally, the opportunity for fintech players, because again, I know there's a bunch of fintech players in the room. Ben has covered most of this. That's my little princess. She's almost 4 years old. Her name is Ariana. So as Ben pointed out, I had the pleasure and privilege. That might be better. Yeah. That's all right. There you go. Much better. I have the pleasure and privilege of leading Fintech globally for Bain. I'm based in London, although I think if you ask my wife, she'll give you a different answer because I'm pretty much traveling about 300 days a year, which is very exciting to have the ability to work with so many different players in different parts of the world. But what that basically means is, on one hand, I get to do all the cool and exciting stuff that we do as an organization, and B, unlike the majority of Bain partners that you will have worked with, I get to wear a t-shirt and sneakers, unlike instead of a three-piece suit, which it makes it a little bit more comfortable. Sorry, Ben. Ben covered most of this, but I'm one of those guys who's literally spent his entire career in financial services. I don't know whether that makes me a boring former banker who's managed to convert and is now Mr. Fintech. So I started my career as a private banker for ABN AMRO. A hand up if you remember, ABN AMRO is one of the world's leading financial institutions. Things have changed quite a bit since then, sadly. Now it's just a relatively small local bank in the Netherlands. But back then when I started my career, it was phenomenal to have the ability to work with what was at the time one of the largest financial institutions in the world. And it was an amazing learning ground for me. I work with some of the other large Dutch banks. I worked on the integration of ING and Postbank, for example, two big banks in the Netherlands. I moved to London 12 years ago. I've had the pleasure of working in various parts of the world. I worked in Hong Kong, I've worked in Singapore, I've worked in the Middle East, I've worked in the US, I've worked in Omaha, Nebraska, which I can tell you is not an exciting place to be in, but because of my role, I have the pleasure of working in so many different parts of the world, which makes it really exciting. I was on the founding team of a number of digital banks in different parts of the world, so I spent a lot of time in Hong Kong working with Standard Chartered building Mox, their digital bank, which is now one of the most successful digital banks in the region. Really, it makes me very proud to see that, and to see how that, that initiative has really taken off. Did the same in the UK, so I was on the founding team of Metal, a digital SME bank, that we built for NatWest, one of the big four banks in the UK. And then as Ben pointed out, before joining Bain, so I joined Bain about 2 years ago now. Before joining Bain, I was part of a company called 11FS. Spent 3 years building and running that consulting business. Incredibly exciting journey, starting with a blank sheet of paper, working from a small corner office in WeWork, to then building a team of 200 people, winning work across the globe. And as I said, it was an incredibly exciting journey. I feel very fortunate and privileged to have had the ability to go and do that. Cool. Let's talk about open banking. So in terms of the origin story, and I'm sure that many of you or some of you will be familiar with this, but I wanted to take a little bit of a step back and talk to you about how did this all come about. And it was really interesting and quite a bit of a shock to many people in the financial services industry when the Competition and Markets Authority, so one of the regulators in the UK, back in 2016, published this report. And the report said, this was the actual title of the report. It said, making banks work harder for you. Now, having had the pleasure of working with different regulators across the globe, this was the first time that I saw a regulator take quite a ballsy approach, effectively, and a really interesting angle, to saying, hey, banks, you guys are not working hard enough, right? And both in the retail and the SME space, and this applies to the UK, it applies to Brazil, it applies to various other parts of the world, the market is effectively dominated and has been dominated by 4 or 5 players who control 80% market share. We need to do something about that. And the Competition and Markets Authority effectively forced the 9 largest banks to get together to implement open banking. Now, one of the things that the report, this is a literal extract of the report, and one of the things that the report called out is that, as I said to you before, you as banks need to work a lot harder, right? You're in a very comfortable position. You're not doing enough. You're not doing enough to really drive innovation. You're not doing enough to provide a better customer experience. And effectively, you are going to have to open up. We want to see more competition in the market. It's actually quite interesting to see how open banking in the UK has effectively evolved, because the original objective was basically this, right? The original objective was, we want to see more competition in the market. If you look at the players who have most benefited from open banking, it's not necessarily the banks. Right? We've seen, and again, I'll talk about this later on, but we've seen the emergence of this phenomenal ecosystem. We've seen some of the open banking players in the UK and various other parts of the world raise hundreds and hundreds of millions and have built phenomenal businesses that probably wouldn't exist if it wasn't for open banking. And I think that, to me, is also one of the exciting things for you guys here in KSA. I do think there's, don't get me wrong, I do think there's a phenomenal opportunity for the banks, and again, we'll talk about this later on. But ultimately, I think the emergence of so many exciting players that we've seen in the UK, in Brazil, in Hong Kong and various other parts of the world, I would love to see that in KSA. And I know that's starting, but I'm 100% convinced that in the next couple of years from now, we'll see a really thriving ecosystem off the back of the implementation of open banking. I'm sure that many of you will be familiar, and again, I've seen probably 157 different definitions or attempts at trying to define open banking, but this is how we effectively define it. So the concept of open banking supposes that banks provide access to financial data to foster a competitive environment between larger and smaller companies and provide a better customer experience. I think that last part, to me, is key, right? To me, this really is less about competition, right? To me, this is, how do you leverage the data that exists? How do you, as banks, open up that data to a variety of third parties to ultimately provide a much better customer experience, both on the consumer side as well as on the business side? Because, let's be very clear, this isn't just a consumer-facing regulation, right? Open banking has tons and tons of benefits for small businesses. And again, some of them, I know some of them are in the room as well. Ultimately, if you look at the model on the left is effectively how banks have been operating for decades, where the whole manufacturing distribution model, banks owned that entire value chain. Banks were manufacturing their own products and then they were distributing their own products. Now what open banking does is you basically move to that model that you see on the right, where you see a lot more openness, you see a lot more innovation, you see a lot more cross-collaboration, you see a lot more data sharing, right? And as I said to you before, that has effectively allowed the emergence of so many exciting new players who have entered the market. But for banks, it's been challenging. It's been really, really difficult for a fair few banks to comply with the regulations, right? And to really see this as an opportunity. And again, I'll talk a bit more about some of the challenges that I've come across further down the line. In terms of the benefits, again, we can talk about this for hours, but to me it really comes down to these 5 things. Right? To me, it really comes down to ultimately convenience, and I'll give some more specific examples later on. It comes down to competition. It comes down to cost reduction. It comes down to personalization, and then finally it comes down to improved decision making. And as I said to you before, I'll give you some more specific examples further in terms of use cases, because one of the biggest challenges that I've come across is, again, what does this mean for me as an organization? If I'm a fintech player, you're looking to benefit from open banking, what does that mean? If I'm a bank, you're looking to benefit from open banking, what does that mean? How do you really go beyond regulation to really benefit from the opportunities that open banking provides? Because there are plenty. And I think the advantage that you guys have, unlike us in the UK, when we first started this journey back in 2016, is we were starting with a blank sheet of paper. We didn't have the benefit from being able to look at what other countries have done. We didn't have the benefit of looking at other players in this ecosystem who are probably 4, 5, 6 years ahead of you guys, right? So, and use that as a source of inspiration. And it was really, really hard to go and do that, right? So I think you guys are in a phenomenal position to really benefit and learn from all the exciting things that we've seen in Hong Kong, in Brazil, in the UK, and various other parts of the world. Now, even though open banking generally, I think, has received tons and tons of positive responses, and we wouldn't see so many different jurisdictions around the world adopting open banking if they didn't see the benefits, or if it was a complete disaster. But it hasn't gone without any controversy. And I think we have seen, I don't know whether you guys are familiar with Anne Boden. Anne Boden is the founder and CEO of Starling, one of the most successful neobanks in the UK. And a couple of months ago, Anne spoke to the Treasury Committee in the UK and basically said that open banking is a complete failure. Open banking has not achieved what it originally set out to achieve. Right? And I think in a way you could argue that she's right, because if you look at that quote, so people want better service, they don't want their data. I think it's hard to disagree with that. Right? If I put every single one of you in control of your personal data and just let you guys figure out what you're going to do with that, that's not the point. Right? That's not the point of open data. So even though part of the objective is to put consumers in control of their data, ultimately what they're looking for is that better service, that better customer experience, a better personalization. But I think that quote to me, on one hand you could say, yeah, she's right. On the other hand, that's nonsense. Right? And off the back of that, so 2 things happened. One, 53 very, very senior and very prominent figures in the fintech space got together. I'll just let you read this at your own leisure. But 53 different people in the fintech sector got together. They wrote a letter, and again, you can see the full letter here. They wrote a letter which basically said, and whatever you said is nonsense. We fundamentally disagree with you. Because open banking for us, and it was quite interesting to see the mix of people who signed this letter. And many of them effectively said that we open banking has been so vital for us as a business that on one hand our business probably wouldn't be around if it wasn't for open banking. But also if you look at some of the numbers, well, we'll talk about some of the numbers in more detail in a bit, but if you look at some of the numbers,
yes, adoption has been relatively slow early on, but adoption is really, really picking up. And let's not forget that in the UK, unlike here in KSA, in the UK, we had to get 9 of the largest banks to actually work together to agree a common set of standards. That in itself was incredibly hard. Right? And then consumer adoption always takes an awful lot of time. I think we've seen this with various other technologies. Contactless cards in the UK, perfect example. Contactless cards has been around since like 2007 or 2008. But only when you were able to tap your card when you get into the tube or a bus or a train, that's when adoption suddenly took off. And you're now starting to see the same with open banking. If you look at the stats, open banking adoption in the UK, that stat would look like that. Right? And if you start to look at the different use cases, so beyond just pure adoption, but if you start to look at the different use cases, and again, the funding that some of these businesses have received, we're really, really onto something. But I think we need to be very mindful of the fact that it is still relatively early days. So if you were to ask me, even though open banking has effectively been around for a couple of years now, have we reached full potential? No, we haven't. Right? We have yet to move from open banking to open finance. Open banking is effectively pure transaction data. Open banking would also give you access to pension data and investment data and various other sources of data. But we are still on that journey. Right? So even though I think there's a lot of valuable lessons learned when it comes to the rollout of open banking in the UK, it is still very, very early days. And we also need to be very, very mindful of that. And I think for the regulator in the room, or anyone who is looking across the retail banking industry. Now, for those of you who are familiar with the UK with the UK regulatory bodies, the CMA has been involved in a lot in recent years. So for the CMA to come out and say open banking has basically been the hardest thing that we've been trying to attempt in the past couple of years, again, says something about how challenging it has been for them. It also said that there were some governance failures, that the CMA did not fully anticipate the scale and complexity. The technical solutions, the implementation of that has been challenging, and there were quite a few implications around the uncertainty of open banking. And again, getting the 9 largest banks to actually work together has been really, really hard. And I sincerely hope that everyone here pays attention to what has been happening in the UK. And the report is very, very detailed. And you need to see that as key lessons learned. And I think it's really important that for any jurisdiction around the world that is looking at or in the process of implementing open banking or open finance, that you pay close attention to what's been happening in the UK. But again, as I said to you before, one of the biggest challenges for us was we started with a blank sheet of paper. We couldn't look at Hong Kong or Brazil or another jurisdiction and say, hey, how do we avoid some of the mistakes that these guys have made? You guys have that advantage. Right? And I sincerely hope you embrace that and you pay close attention to what's been happening in the UK. I wanted to do a little quiz. You see 4 relatively big numbers on this screen. And I wanted to ask you guys to let me know or have a guess what these numbers actually mean. So 32.4 million, 7 million, 6 million, and 80. Any guesses? Keep going. It's like he's read my slides. Keep going, yeah. So we've got number of users. I heard 80 countries, correct? No. I'll give it away. There you go. So 32.4 million successful API calls made by third-party providers. If you would have looked at that number 6 to 12 months ago, all of these numbers would have looked fundamentally different. And it shows you the rise in adoption that we're seeing. And to be clear, these are UK specific. Right? So the first 3 numbers you see here are all just based on the UK. But again, if you were to plot these figures onto a graph in the past 12 to 18 months, massive, massive rise in adoption. Right? And it shows you that both in terms of awareness, the fact that companies are now starting to realize the commercial opportunities that open banking also provides, the adoption that we're seeing both on the consumer side as well as on the small business side. it's only going one way, which is up. But we haven't necessarily seen a dip, or we haven't necessarily seen growth slow down, right? Which again I think is a great thing to see. 7 million is the number of monthly open banking payments. I expect that figure to go up significantly now that account-to-account payments and VRP, so variable recurring payments, is becoming a thing now in the UK. So I think we'll go from 7 million to a significantly higher number in the next couple of months. 6 million, so that's across both consumers and small businesses. So the number of open banking, so active open banking users, again, that figure definitely wasn't 6 million and has been rising steadily in the past couple of months. And then last time I checked, I mean, the number might be different now, but last time I checked, there were about 80 different countries around the world in the process of open banking. And again, that number continues to rise very, very rapidly. Again, if you look at the approach that different countries around the world have taken, it tends to be a staged or phased approach towards the implementation. Right? And here you see an example of what we effectively see in different, how we see this play out in different parts of the world. So first wave, relatively basic open banking, right? Based on PSD2 standards, so it's mostly focused on transaction data. The next step then tends to be open finance, where again you get access to more different sources of data. And then you move towards more API-based solutions, which again opens up a whole bunch of really, really exciting opportunities. And then if you look around the world, you've basically seen two different approaches. In most cases, this has been regulatory driven, like in KSA, like in the UK, like in Hong Kong, like in Brazil, like in various other parts of the world. But in other cases, it's been market driven. Some of you may have seen I was at Money 2020 in Vegas a couple of weeks ago, and one of the US regulators now announced that open banking is finally going to become an actual thing in the US. We've been waiting for that announcement for a long, long time. Let's see whether it's actually going to happen, because again, getting a bunch of different regulators in the US to agree on something is not that straightforward. But it's not as if open banking hasn't really been a thing, right? Because the market sort of saw the opportunity and decided not to wait for the regulator to step in and say, hey guys, you're going to have to do this, right? You've seen, some of the biggest open banking players in the world, like the Plaats of the world, I think have done a pretty decent job. And that's not because the regulator told them to do that. They just saw this as a massive opportunity. But I do think having a set of regulatory standards that players in the ecosystem need to comply with makes it so much easier. Because one of the biggest challenges to adoption, and we've seen this in various other parts of the world, is if you have so many different standards that you're going to have to comply with. If you're a fintech business, for example, looking to serve different countries, and every single country has a different set of standards, that makes it really, really bloody hard. Right? So again, seeing the regulator take an active role, and again, I think in the UK, as well as in KSA, we've been very fortunate to have a very progressive regulator that wants to see more competition, right? That sees the opportunity that things like open banking actually provides. So getting that regulatory push tends to make a massive, massive difference. Any questions about this, by the way? Yes.
I think there's an issue with having only a regulatory push because it becomes a tick mark, And I think it's what's happening in most of the market is regulated, where you want to be compliant with central bank, and that's all. Where is the buying in now from banks? I want to open my account with Fintech. What's in it for me? It's very, very important. I can see the partnership with the market driven, they are not winning, but where is the success from your point of view?
Hold that thought, because that's one of the things I'll talk about next. Again, as if you guys have been reading my slides. If you look at Brazil as an example, again, so Hong Kong is going through 4 different phases, Brazil is going through 5 different phases, but instead of trying, because it is very, very complex. And I think, again, even if you take the UK as an example, we haven't reached the stage yet where we're now looking at open finance. We've been talking about that for quite some time, but there have been quite a few different challenges, which has made it hard for us to move from open banking to then open finance. And again, you're providing access to a variety of other different data sources. Brazil's actually going really well. So Brazil's taken a more aggressive approach to the implementation of open banking compared to the UK or compared to Hong Kong, for example. So again, looking at if you are involved in this and if you want to understand the opportunities that this provides, have a look at what some of the mature economies are doing, or some of the more mature open banking markets are doing in this space, because there's plenty and plenty of lessons learned. Now, looking at KSA and working with a few players here on their open banking strategies, and again, what does it mean for them as an organization? What opportunities does it provide? What use cases should we look to prioritize? I think there's a few, and I'd love to get your thoughts on whether you actually agree or disagree with me. But again, based on my experience, having worked on various open banking pieces of work around the globe, I think there's a few different things that are that I find important, or key to the successful implementation of open banking in KSA. Having that common standards, as I said to you guys before, I think is absolutely critical. If you don't have that, if you don't have a clear rule book that sort of guides you through the process, it's really hard, right? Because if you're a bank or if you're a fintech, for example, and every single bank basically has their own set of standards, again, it just makes it so much harder than it should be, right? And again, I've seen different countries around the world take different approaches, but having that common standards, having that clarity around what that regulatory framework, which brings me to the second point, looks like, is absolutely important. And again, as I said to you before, I think having a progressive regulator that takes an active stance, and works actively with the broader financial services community here in KSA, I think is incredibly important. Right? And obviously, Sama is actively doing that. Personally, I think that collaboration between the different players in the market is really, really important. I think in order for open banking to be successful, and that's the last point on here, awareness and education is very, very important. The number of articles that I've read, in UK press and various other parts of the world around, well, I mean, the term is a bit misleading, right? Because if I speak to, my mom is 79 years old. If I were to try and explain open banking to my mom, just the term open banking, would be very, very scary. Like, does that mean I'm gonna, give away all of my data? And of course, the answer is no. It's incredibly secure, right? But again, getting the different and active collaboration between the banks, as well as the other players in the ecosystem. So this is SEMA and the banks and the fintechs, and Fintech Saudi, right, and other parts of the ecosystem actively working together is incredibly important, right, in order to for KSA to realize the potential that open banking has to provide. As I said to you before, I built the first open banking sandbox back in the days. This is years ago now. But creating an environment. So if you're a fintech player in the room, right, you want to sort of play around with different sources of data that banks are providing. How do you do that in a safe environment, right? And of course, regulators have a key role to play in this space. But creating that environment, and I know you guys have that here. I think it's called Fintech Lab. Is super, super important and absolutely vital when it comes to adoption. Then you need a broader ecosystem, right? If the banks say, yes, this is phenomenal and this is an incredibly exciting opportunity for us, that's great. Then if you have a bunch of fintech players who are operating in this space, that's great. But you really need different parts of that ecosystem, with TPPs, or third-party providers, and AISPs, or account information service providers, and various other players in that ecosystem to work together, right? Because otherwise, again, it's going to be hard to realize the full benefits that open banking has to provide. I think, and again, we talked about this before, right? Don't go for a full big bang. Take more of a phased implementation approach. Learn from what other players around the world have done, which is super important. And we talked about the point about consumer awareness and education. What open banking has also done, and I mentioned this briefly early on, but what open banking has also done is it has created this phenomenal new ecosystem. Because many of the players that you see on this page, or this page, or this page, again, these businesses didn't exist a couple of years ago, right? And if you look at the different categories, so you got enablers, you got connectivity, you've got data retrieval, you've got consent management, you've got TPP checking, and then you've got broader banking as a service players who are also looking to benefit from the opportunities that open banking that open banking provides. Again, many of these businesses didn't exist a couple of years ago. So what I would love to see is, if I come back in 12, 18 months from now and speak to you guys that we're going to see this so many new exciting open banking players in KSA that are operating here in the market and across the region more broadly, and that opportunity is there, right? And again, I'll show you some examples of what other players around the world have done and the success that that they have that they've had. And I would love to see the same thing happen here in KSA. As of last month, and again this is just in the UK, but as of last month, there were now over, and again just to show you the growth that we've seen in the UK, right? So there were over 300 regulated open banking providers. So that's a mix of third-party providers and account providers. And again, because you had to be or had to become a regulated entity in order to be able to provide open banking services to the market, some of these businesses existed before, but a significant number of those 300 didn't exist a couple of years ago. Right? And again, the good thing about the UK is that the regulatory standards were very, very clear. So making sure that you have a clear understanding of what open banking means for you as an organization, how do you go through the process, has been incredibly important. To build on this gentleman's point, I remember working with one of the big 4 banks in the UK when open banking was just announced. And I think 90% of my discussions with the board and the executive team and other people in the business, this is the number one question that people had. Isn't this just yet another regulatory initiative? Right? Because we've got plenty of those already, so right? To what extent is open banking an opportunity for us? Or to what extent is it just something that we're going to have to comply with? And that's the view that most banks, to be fair, that's the view that most banks around the world have effectively had when they first found out about open banking, especially if it's regulatory driven. Whereas I would argue that it's actually an opportunity to develop new capabilities and new business models. And I sincerely hope that if I asked you to put your hand up, you would actually agree with me. Right? As opposed to saying, well, it's just a thing that we're going to have to do. Right? I think, those organizations are fundamentally missing the point. And to be fair, it was only banks who were saying this. The fintech players saw the opportunity from the get-go, saw the opportunity from day one. But for the majority of banks around the world, it's been difficult, right? It's been challenging. It's been really, really hard because if you have to expose a bunch of relatively basic APIs, on top of a legacy infrastructure that's 20, 30, 40 years old, and if you're having to convince your executive team that this isn't just a regulatory initiative, there is actually a massive opportunity for the organization. If you don't necessarily have the talent or the capabilities required, right? Because for many of the neobanks in the UK, for example, this was super easy. They literally had a handful of people working on the implementation of open banking. Whereas, for some of the banks that I've worked with, in some cases, they had hundreds of people working on the implementation of open banking. Right? And that's just effectively the stuff that is relatively table stakes, that should be relatively straightforward for you to do that. So when these organizations then move to from open banking to open finance, again, there's plenty of lessons to learn from open banking, which should hopefully make it easier for them to move to open finance. But I'm 100% convinced that for some banks, it is going to be quite challenging to go and do this. But also, it's been quite costly. Right? If you look at Westpac, they said we expect it's going to cost us 200 million Australian dollars, to be clear, 200 million to implement open banking. I spoke to one of the tier 2 banks in the UK a couple of weeks ago, and the CEO told me that it cost them £125 million to implement open banking. £125 million. That's a hell lot of money. Right. And then in the UK, and again, this varies in different parts of the world, but in the UK, the 9 largest banks also had to basically put money into something called the OBIE, so the Open Banking Implementation Entity. So the banks were basically funding that effectively industry body. And these figures are, these are not the latest figures because they haven't been published, but back in, I think, 2019, they spent £81 million. In addition, so this is not implementation costs, £81 million on supporting the OBIE. Yes.
Okay. I work with 3 major banks, maybe more of you might have worked with. They spend north of 200 million in the UK. The problem is not that money, it's the OPEX that rolls
Yes.
into every year. So it's the operational cost, OPEX, that rolls into all the following years. So we took, for example, JP Morgan, and they said, we don't want it to get into all these rails. You build the rails, and they give it to us. Sorry, by the way, I represent Banfico, which is an open banking service provider. But then what they're trying to do now is they want to build innovations. They want to use the same budget to build innovations, not the rails.
Yes. No, I think you're absolutely spot on, man. I think for those banks who realize the opportunity from the start, again, they don't see it as a regulatory initiative, but they see this as an opportunity to identify new revenue streams, drive innovation across the organization, use it as an opportunity to modernize your technology stack. Yeah, I could go on and on and on, right? But yeah, that requires a particular vision and mindset and leadership, and right. And I remember having those conversations very early on with some of the UK banks, for example. And it was quite hard at times to convince the organization that there was a massive opportunity for the organization. This was a survey that was done 2 years ago by Tink, one of the big open banking providers in Europe. And it highlighted some of the key benefits based on a whole bunch of different interviews with banks. So again, I'm not going to go through every single one of these, but here you clearly start to see some of the benefits that open banking provides. Right? And the benefits are plenty. What's quite interesting actually is if you look at the one in 39% revenue growth for new products and services, and 37% revenue growth from new APIs and developer services. So again, how do you use open banking to effectively identify new revenue streams for the organization, for example? So this isn't just about enhancing the existing customer experience. There is a massive opportunity for the banks in the room to use open banking as an opportunity to identify new revenue streams. And then here, so this was some research done by The Economist, which talks about 45% of banks want to move towards more of an open ecosystem. And of course, banks historically have been very, very close. We talked about the manufacturer-distributor model that most banks have been, how most banks have been operating for decades. But open banking, to your point, also gives you the opportunity to move towards much more of an open ecosystem. And as an organization, we're seeing a lot of interest in embedded finance at the moment. So how do you embed financial products and services into the customer journeys for non-financial services businesses? Embedded payments, embedded lending, embedded insurance. That's sort of built on this, right? So banks clearly, at least the majority of banks, clearly see a massive, massive opportunity here. And then if you look at different use cases, so this was some analysis that we've done ourselves. But if you look at different open banking use cases based on a variety of interviews that we've done with banks, again, you see a broad range of different use cases that banks have started to explore, right? From onboarding to KYC to various other different services. And I think we can probably share the slides later on. I see lots of people taking pictures, but I'm sure we can share the slides later on. Now, in terms of some of the key challenges that we've come across, we've touched on some of these, but just to highlight some of the challenges that I've personally come across and my team has come across doing this type of work with different organizations around the world. One of the key ones is, who's actually responsible for implementing this? Right? Should this sit within payments? Should this be a cross-industry, or sorry, an initiative that the entire organization really needs to rally behind? Is this a technology initiative? Should this sit within our risk and regulatory team, for example? I remember having lots of conversations with organizations about who's ultimately responsible for the implementation of open banking, right? And again, that hasn't necessarily been that straightforward, because the answer is it's kind of all of the above, right? It goes across the entire organization, so sort of putting it in a separate part of the organization, at least from my experience, isn't necessarily going to work. I think it requires clear ownership, right? But it also requires close collaboration with different parts of the organization, with risk and compliance and procurement and various other parts of the business. Do we play offense or defense? Big question. Right? Now, from my perspective, it's pretty obvious. Right? You should use this. You should play offense, right? Both as a bank, but of course also as a fintech player. But particularly if you're a financial institution looking at the opportunities that open banking provides. Then who should we look to partner with? Right, so how do we integrate and aggregate external services? One thing that banks are not particularly good at is partnering. Right? Lots of amazing proofs of concepts, but a lot of them never really see the light of day. Right? So how do you, because I think it's really important, if you're a bank in the room, looking at this stuff, it's really important for you to think about, at the risk of stating the obvious, but to what extent, when it comes to building this, how much of this is going to give us a unique competitive advantage, and therefore we should look to build it ourselves, versus there's some amazing solutions out there that we should just look to partner with, which makes the implementation and commercialization significantly easier. How does open banking shape a new business and systems architecture enabled by APIs? What skills, talent, and capabilities are required? Again, building on the gentleman's earlier point, because open banking is one of those things that if you're a financial institution, gives you the opportunity to really modernize your existing technology stack, to really out-innovate, to develop new capabilities for the organization. I wanted to wrap up with a couple of examples of open banking players around the world and how well some of these players have done. So I'll give you a couple of examples. Go Cardless, I had the pleasure of working with the guys at Go Cardless. Go Cardless, UK-based organization, basically one of the OGs, one of the oldest players who've been working in the open banking space for quite some time now. And Hiroki, incredible guy, incredibly smart. So they raised 312 million recently. And he said the rise of open banking presents a once-in-a-generation shift, one that will change the way payments happen all over the world. They're now a unicorn business. The business is doing really, really well. They've also diversified the business as well. But I think a great example of the opportunities that open banking provides if you're a fintech player in the room. TrueLayer, one of the other leading open banking players in Europe. So they raised 130 million, which also made them a unicorn business. And Francesco said, open banking is giving us the opportunity to rewire global finance using modern APIs and open architecture, opening up access to financial data and creating new ways to pay and verify identity. Another example, Tink. Now, I'm sure many of you that are familiar with the open banking landscape, you'll be aware of the fact that Visa tried to buy Plaid, one of the big US open banking players. That deal fell through, and then they say, okay, then we're just going to buy another one. So they acquired a company called Tink for more than $2 billion. And again, Daniel, the CEO of the business, phenomenal guy, incredible team, and the business has done very, very well as well. And again, has massively diversified since they first launched the business, and they're also partnering with a whole bunch of different banks around the world. Plaid, 425 million Series D. So if you're a fintech in the room, looking at what's been happening, in this landscape, and looking at what other major players in the open banking space have done, I think the likes of Plaid, and again, for those of you familiar with the open banking space, they had to lay off some people recently, but I think the same can be said for many other fintech players around the world who've been growing really, really rapidly. So we're seeing, of course, a bit of a correction in the market now, but Plaid as a business is still a phenomenal business. Right? So again, being able to raise $425 million, I think is phenomenal. But this isn't just a European thing or an EMEA thing. Right? We see companies like dLocal, based in Uruguay, also raising significant sums of money at a significant valuation, $5 billion. Right? So I'm hoping that for the fintech players in the room, your eyes start to lit up right? When you see how this is starting to play out in different parts of the world and the opportunities that this provides for you as an organization here in the kingdom or in the region more broadly, because I know some of you are already looking to expand to different parts of the region. There was a really interesting article in Quartz a couple of weeks ago. I've added the link here, which talks about Africa is betting big on open banking and open finance. And there's now 11 countries across the African continent who are in the process of implementing open banking. 57%, or 320 million people in Africa, are considered unbanked or underbanked. So the opportunity for open banking to change that, to bring people into the financial ecosystem, is phenomenal. Well, it's probably a once-in-a-lifetime opportunity. So therefore, I'm not surprised that we see so many different African countries also jumping on the opportunity that open banking provides. And then it also talked about how they think the size of the open bank, so this is revenues, to be very clear, how they think the size of the global open banking market, so this is not just Africa, but globally, will develop in the next couple of years. Again, think about that number for a second. 124 billion in revenues that you guys can go after. And this doesn't just apply to fintech players, but again, there's some phenomenal opportunities for the banks, as we talked about earlier on. Yeah, we've got our lovely friends here. As I said, this isn't just just a thing that's happening in EMEA or in Europe, or we see this play out in various other parts of the world. I'm just highlighting a few examples here, but we do see some incredibly exciting developments happening here across the region, which on one hand makes me very proud, but also very excited about what open banking is going to bring, and how open banking, from my perspective, I think is fundamentally going to disrupt the financial services landscape across the region more broadly. Well done. But then we've also seen a variety of other players jumping onto the open banking bandwagon. So Klarna has launched a whole separate business, a separate entity called Cosma, to benefit from the opportunities that open banking provides. I think they now provide connectivity to, I think it's 15,000 different banks across Europe, for example, which is more than the majority of open banking, the existing open banking players in Europe provide in terms of connectivity to banks across the continent. Here, again, just to highlight some of the exciting things, or exciting opportunities that open banking provides, and again, we'll share the slides, so I'll just let you read this for a second, but in so many different countries around the world, the cost of living has gone up significantly. Right? Lots and lots of consumers and small businesses are really, really struggling. And I fundamentally believe that open banking has the potential to change that. Well, we talked about the unbanked and underbanked population in Africa, but this doesn't just apply to Africa. This applies to pretty much every country around the world. And when you really start to look at the opportunities that open banking provides, and again, some of the things on here, talk about this in a bit more detail, I think are phenomenal, right? Are absolutely phenomenal. And then, finally, here you see some use cases that I've come across, that I'm sure some of you have started to look at, but the use cases and the opportunities that open banking provides, and the innovation that we're starting to see in different parts of the world is incredibly exciting. It is still very, very early days, but just look at the list of different use cases. Right? So if you're a fintech player in the room, the opportunity for you to provide API connectivity to the banks, because the majority of banks I've worked with, they haven't built this themselves. They partner with someone like you guys, or for the fintech players in the room. The ability to, again, as Go Cardless is now doing, really, really doubling down on account-to-account payments, effectively building a new alternative payment rails, alternative to cards, and obviously, for so many small businesses around the world, cards is incredibly costly, right? And also having to type in your card number, it's not a great experience. Whereas account-to-account payments is such a better, cheaper, faster, more convenient, more secure way to pay for goods and services compared to paying with cards. Enhanced credit decisioning, better ways to spend, save, borrow, and invest, increased control of your financial data, transparency of day-to-day finances, to really tackle debt, embedded finance solutions, as I mentioned earlier. So many different and exciting opportunities that open banking provides. I wanted to end on a bit of a high, so building on what I was saying earlier. Here you see three other relatively well-known open banking players. So Bud, Kevin, and Token, who again have all raised significant sums of money. These are recent fundraisers, right? So despite what we're seeing both in public and private markets now from a fintech perspective more broadly, and the slowdown that we're seeing in funding, you still see a lot of businesses being able to raise significant sums of money because they've got a solid business model, they've got an amazing team, and investors really believe in the opportunity that open banking provides. And again, I sincerely hope that when I keep an eye on TechCrunch in the next couple of months, I'm going to see more and more fintech players here in the region also make it onto the front page of TechCrunch with exciting announcements about, hey, we've just expanded into a few more markets, we've raised X amount of capital. So I sincerely hope that we're going to see that happen in the next couple of months. That is it. One last plug from me. So with my team earlier this year, we launched something called Deciphered, which is our own fintech podcast where we basically talk about some of the latest trends and developments in financial services more broadly with an amazing bunch of guests So give it a listen. We've talked about some incredibly exciting topics, from institutional blockchain adoption to embedded finance to buy now, pay later, to various other topics. So make sure you subscribe, give it a listen, and let me know what you think. Thank you very much, guys.
Thanks, Jeff. We will share the slides with you, and it's also being streamed live, and you'll be able to get the video of the recording via all of the Fintech Saudi channels over the next few days. Thank you very much, Jeff. I think you've covered a lot of the subjects that we're probably going to cover in our upcoming discussion. I think one thing for me as a kind of minor point is maybe open banking needs to be rebranded. Maybe it should just be called banking. The open banking, NOMA, the way that we're trying to get people who are the wealthier, the transactors, the regular transactors in these more mature markets to understand and engage with open banking and proactively give consent to open banking players. Maybe it needs to be rebranded. So maybe that's something that we can work on together in Saudi Arabia. I don't know. So what we have coming up now is a panel discussion. And rather than just having a normal discussion, we're going to try and have a little bit of a debate. Now, you're in a room, hopefully everyone here is an open banking advocate in general. Certainly everyone on the panel is an open banking advocate, so it's not going to be polarized forces against each other. But some people might think that open banking is somewhat overhyped, and others might be of the belief that open banking is the next big thing, the future change within banking that is going to really be a part of all of our landscape within Saudi Arabia and beyond for the next 10, 15 years before we bring in open finance and open data. So we're going to have that discussion, and I'd like to start welcoming the panel guests up to the stage. So first of all, Mylon, who is our BSF Head of Open Banking and Fintech. Mahdi, better late than never. So welcome to BSF, good to have you. Lean Technology is an organisation any of you who are plugged into the Fintech Saudi ecosystem will know only too well. Jeff, no introduction needed. Dimi, who also works here in BSF as the Head of Banking as a Service. So open banking, banking as a service will be hopefully the enablers for our organisation in the future. And finally, Emil from Tarabit, an organisation, again, which if you're plugged into the Saudi ecosystem, you'll know incredibly well. Welcome, Emil. Okay, so I'm going to go and take a seat over here. So we have divided our experts into a couple of groups. As I said, they are all advocates of open banking generally, but I'm hopeful we'll get some insight around whether people think it's overhyped or whether they think it's going to be the next big thing. Before we ask the panel, what do you guys in the room think? If you raise your hands if you think open banking is overhyped. Somebody that's worked in open banking for how many years, sir? 5 years, thinks it's overhyped. Okay, that's quite interesting. A couple more. And put your hands up if you think it's the next big transformation within banking and payments. Okay, good. All right, so there you go, guys. You know who you have to win over. So first of all, Mehdi, who is on the team of the advocates for open banking, what are the benefits that open banking is going to bring to Saudi Arabia and in general the GCC?
Thanks a lot for having me. So obviously everyone here is familiar with open banking. So what we'll see is benefits for both merchants, but also benefits from the end user perspective. And I'll be breaking those down in two phases. So firstly, in terms of merchants, what we'll see in Saudi over the coming year is a lot of adoption from fintechs. We'll be the first adopters of open banking services, and other industries such as lending or remittance, for example. In the open banking for these merchants will go through the normal technology adoption life cycle, meaning that more and more consumers will basically start adopting open banking, but for the first wave of merchants, it's not even a question whether open banking will be adopted or not. I was catching up with the Fintech Saudi about 2 weeks ago, who was telling me that there are now 150 fintechs in Saudi. The plan is to have 500 of them by 2030. But for those fintechs that will sort of emerge, open banking payments, for example, is a matter of life or death, right? You'll see a lot of commission-free trading or robo-advisories emerge. Those businesses operate on very tight margins, right? You're asking them to pay 1.5% or 2% per transaction. They start having a negative margin business, right? So those will be adopting open banking services, and inevitably they'll be pushing their end users to be adopting open banking payments as well, right? End users won't be convinced first, right? You'll have maybe an early majority, like the early adopters that love fintech services, that value convenience and a nice user flow. But in reality, in order to really convince an end user to enter their username and password with a third party that they don't know, they really need to incentivize them in a meaningful way. So saving them 1% per transaction is actually what's going to determine whether the adoption is going to be there or not. From what we're seeing in the UAE today is those conversion rates tend to be around 50% or plus for those types of businesses. But for other businesses that are more traditional businesses that will bear the cost of the transaction, the conversion will tremendously drop, right? Because the end user is not as incentivized to enter their username and password. So
Mehdi, talking about adoption, which I think is obviously the name of the game for the business like yours. Dimi, across to you. So Dimi, you live and work in the Middle East, but you have spent a number of years working in London for McKinsey, globally the most mature market from an open banking perspective. In terms of adoption, what have you seen over there? And I like Jeff's analogy around his mother not understanding what open banking is, and I can certainly say the same applies to my mother in the UK, and probably most of my peer group in the UK who are not in technology or financial services. So in terms of adoption, do you think that there are huge challenges that we face?
Yeah, thank you so much. And after Jeff's presentation, it's very hard to be a skeptical advocate of this topic, frankly speaking, but I tried to do so. And it's a very good question because you showed some amazing figures, 7 million transactions. But if you put it in the context, how many transactions are happening every month in the UK, for example? So I checked online payments. It was around more than 400 million now in the UK. It doesn't mean that it's small, it's growing, obviously it's growing, but my skepticism will be around adoption of consumers, right? And I think that the problem may be, my hypothesis will be that if the regulator, not the UK, but any other regulator would put not a bank in the center of this regulation, but a customer, his needs, actually, not only customer journeys, because customer journey leads to your need, right? But your needs and structure in a proper way and saying that, okay, guys, with this amazing framework or legislation, we can solve 1, 2, 3, 4, X, Y, Z problems. Just starting, fitting this or setting up this framework, how ordinary consumer will benefit from that. And speaking about the UK, my friends, I know that's a very bad way of doing so. I asked them recently, so do they make any transactions using open banking, or did they provide contests? They say, no, actually, we don't bother about that. It's not because I have bad friends, they're digital navy guys, they work for consultants or banks, but just they don't see the value for them itself. And I think we know that fintechs, they can sell amazing stories. They're great storytellers. We know that how they can be successful and that they fail consumers, unfortunately. I don't think that it's relevant for open banking, right? I'm saying that I would say that there is should be a work from the regulator, from fintech and from banks itself, right? So we as a community of bankers, we know that hype topics like super apps, blockchain, ecosystems, we know that there is some spike in this discussion. Then, well, sometimes something happens, and sometimes we have benefits of these hypes, like any financial bubble gives some good also fruits from bubble to say that people might lose some money. In this case, I would say that especially Saudi Arabia has a great chance to put in the center of this legislation consumer and consumer needs, and that might have a big difference in this country.
Thanks to me. Jeff, do you want to add to that?
Yeah, just because I agree with most of what Dimi said. Right? I think there's a fundamental difference, though, between you're trying to explain. It's like you're trying to explain Web3, right? I think we need to stop being obsessed with trying to explain a particular type of technology. I think it's incredibly important to work backwards from what are those use cases, right? What are the benefits that open banking provides to consumers and businesses? Because when you start to think about, some of the stuff I talked about earlier, whether that's financial inclusion or better access to finance or better borrowing terms or whatever it may be, the opportunities are there. And I think even though awareness and education is very, very important, I think the narrative in the UK has largely been about, trying to explain what open banking actually means, which I think is the wrong approach to take.
Yeah, the OBIE, they created open banking under the pretense of, not enough competition amongst the banks, not around improved customer experience and the offering of new products and services at a better price. So it's a bit abstract for the consumer. But Mylon, to bring you into this, talking about the banks. So Mylon is our open banking lead and works very closely with Sama on our implementation. What are the benefits to a bank like BSF or some of the other banks in Saudi Arabia to implementing open banking?
There are none. No, just kidding. No, there's significant benefits, but I just want to pick up on a couple of points though that have been mentioned around open banking and public and kind of the fintech world and the usage of open banking and the idea that somehow the customer, whether it be an individual or an SME, or in our case in the kingdom we also have corporates, we shouldn't be talking about open banking. The customer shouldn't know anything about open banking. It should be because it's an industry term. You're going to go to your brother or your cousin and say, "Oh yeah, how cool is open banking?" Come on, he's not going to know what you're talking about. But if you say, "Oh, how cool is this Fintech and their new app?" and how it works, okay, he's going to know that, right? So our big challenge, and the big challenge in the UK, the challenge in the UK is the CMA who created open banking and then within the context created OBIE. They failed to consider the communication about what that regulation means to the market. And at the last opportunity, they said it's the bank's responsibility to communicate to their customers what open banking means. Well, at that time, there was no incentive for the banks to do that. So you had a very poor initial beginning of open banking because you're leaving it to the person who has the least to gain to communicate to the customers. Right? That's not a recipe for success. And I think that we have the opportunity here in the kingdom to learn from that and to create a broad market engagement, a broad market communication directed by SAMA, providing the guidance and potentially then a major campaign themselves, supported then by the banks getting that communication out, which will really, I believe, help kind of smooth the way for the adoption of fintech solutions, propositions that are developed based on the use cases, which I'll come to in a second, will really promote open banking. But the end user shouldn't really have to worry about knowing about open banking, just about the security that's going on behind it, that being able to share with your bank, or being able to provide your consent with your bank to share your data is a very secure approach, and so on and so forth. So that's really a key thing, and a major element that has yet to be defined in the kingdom, but something that we can clearly get behind in terms of that communication program. But coming back to the use cases and the approach that I promise I'll try and keep this succinct and short because there's a long way to go. But the approach that Sama's taken is super positive. It's about, and they have a set of use cases that all the banks will be going live with the ability to support. They don't necessarily create those use cases, but they have the ability to support those use cases. So aggregation, personal finance management, credit risk assessment, enterprise finance management. So for the SME and small cap, mid cap companies and things like that, tax filing, simplification and support, letters of guarantee for corporates. These are all use cases that are geared towards seeding the market with functional capability to help grow from the beginning. So that wasn't part of the Berlin group. It wasn't part of the UK open banking strategy, but it is part of the strategy, and it's very much a catalyst for the growth that we hope to have. At the moment, we only have, I think, 14 fintechs that are fully approved by SAMA to work in the ecosystem, but there's a backlog of fintechs, and SAMA's created a new regulatory sandbox environment that should speed that up.
There are quite a few of those fintechs here in the room this evening. One over there in stealth mode. So thanks, Mono. In terms of some of the use cases and some of the challenges, actually, Emma, you're in a good position to try and articulate to us what some of those challenges that the banks face here. And I think a really good point made by Mylon is the challenge around how we help consumers to understand that. We understand how banks have done that in other markets, and it's maybe not gone particularly well. What are you seeing from your perspective are the main challenges for banks, and do you think we're doing it any differently here compared to some of the other markets that have already gone live?
Yeah, absolutely. It's a great point, Mylan. I think other than the customer journeys that will be evolving over time, we have to look at the ecosystem part of it as well. So how the banks implement these solutions, how the regulators push for standardization. The first challenge that I'd like to highlight before getting to the user retention and sort of churn part of it is, so we mentioned legacy systems earlier, right? So a lot of banks today, if they're running on solutions that are 30, 40 years old, like Jeff mentioned earlier, and if they need bigger teams that need to spearhead the regulatory requirement, typically a bank with legacy systems wouldn't just, wake up one day and say, okay, I want to start. I mean, unless there's a big innovation mandate in front of them, they would be pushed by some sort of regulatory mandate. And so a lot of departments, a lot of stakeholders need to come together from data, from compliance, from cybersecurity, from the business part of the bank, the business departments, the CX departments, the EDW departments. They all need to come together. And it can be difficult to identify a stakeholder that owns open banking, both from the regulatory aspect as well as sort of the innovation aspect. We've seen banks that have innovation and digital partnerships and just basic digital banking teams that end up having to take responsibility for this. So that's one of the first challenges, is really navigating through both the legacy systems as well as the different sort of stakeholders that are involved in the bank that need to come together to meet these requirements. The second thing is the evolution of user needs. So I'm going to tie that with the user journey, customer retention, user churn. Every bank is different. Every bank's journey is different. Some banks use your typical biometric authentication for SCA, secure customer authentication. Some banks use username password methods. Some banks don't even have mobile banking applications as it is today. So you've got to log in through a web portal sort of workaround. Some banks will require application service, not to get too technical, but they'll require on-prem deployments, for example. The systems are not fit for an off-the-shelf solution provider on the cloud. So, in terms of how the customers actually interact with all of these different applications. It could be for credit risk, it could be for lending, it could be for payments. I think it's definitely questionable. You know, it's not really a matter of when, it's a matter of how, whether or not these journeys are gonna stick. So, you know, there are different ways, there's different types of flows, whether it's redirect type flows or decoupled flows that a customer uses to authenticate or submit or initiate payments. That all needs to be standardized, or that needs to be clarified, or the steps need to be reduced by the banks. In some cases, it can take 18 to 19 steps just to link a bank account, which is ridiculous, right? And then the other thing is, I think the most important part of this, putting the user experiences aside, is processes. So whether it's TPP onboarding, or whether it's a business stakeholder, or whether it's a BRD document internally at the banks, this is the challenge I'm seeing, and this is what UK went through in the beginning as well. It's just a matter of time. So it is definitely an evolution.
Thanks, Emma. So the implementation is very tough for banks here and everywhere. Just in a word, and of course the answer is BSF, but other than BSF, which banks within the kingdom do you think are really leading with their implementation?
All of them have their own separate set of challenges. I mean, if you, yeah, it's true though. I can't pinpoint any specific bank. I mean, I can, but I'm not going to say any. I don't want to be blacklisted.
Okay, we'll move on.
I want to be able to come back to Riyadh. No, but in all seriousness, it's just to keep it brief. I know I took a lot of time here, but let me just give one example, okay? You've got a bank, for example, that's probably 90% ready today in terms of the backend systems and the APIs. But when it comes to actually giving access to a TPP that requires in the kingdom, one of those TPPs that are licensed today, they don't have a process defined for TPP onboarding and management. They don't have a stakeholder identified who will bring in the data teams internally at the bank to figure out if this checks all the internal processes at the bank.
This is a huge challenge, you know, going beyond compliance, as we call it here. And I might just bring Marlon back in here because obviously implementing open banking in the bank from a compliance perspective is one part, but doing the needful and engaging with the fintech community, coming up with products, coming up with onboarding, coming up with propositions for them is really the next step. How are BSF approaching that?
So you brought up a couple of key areas in that. So the process for onboarding it isn't terribly complicated, to be honest. It's not rocket science. It's just a matter of going through and clearing through a design process. Now, sometimes it works better than others. You get better response times on emails and queries. But I'm looking with two partners that we've been through that process with. So we're improving as we go. I think the other big question is, so how do you turn all of that into go beyond compliance, right? And for us as a bank, our strategy is exactly that, is to go beyond compliance, and make open banking a key contributor to our overall strategy, which is to become the digital go-to bank. So with that in mind, it's really about what do we need to do to become compliant first of all, but then what do we need to do, and what kind of creative process do we go through to look at use cases that we can develop that take us outside the scope of pure compliance and create real value for our customers, our fintech partners, and ultimately the bank as a whole. So, and that really comes down to, there's three areas where you can create benefit. One is around cost savings. The other is around creating something that's particularly attractive to customers, so you have customer retention. And if it's that good, then you're also using it to attract new customers, but then also new lines of revenue. The new lines of revenue is particularly challenging, and I noted that Jeff said that there's tons of revenue, and Tink says that there's tons of revenue to be made. I find I'll challenge anybody in this room and online to show me one case that generates real revenue. But that's on the other side of. I'm not supposed to be on that side of the equation today.
So why don't we bring you in, Jeff? So, in terms of the development of the use case, obviously, Mylon has reeled off the list of key services that will form part of the initial SAMA mandate. What interesting business opportunities or channels do you think we could build upon that could be monetized?
I think it's a great question, and I talked about some of this towards the end of my talk, but banks, and I'm generalizing here, but the majority of banks around the world are not particularly good at developing new ventures, new businesses, right? And therefore, I'm not surprised that in the majority of initial conversations that I've had with banks around the world when it comes to open banking, they didn't necessarily see this as a really exciting commercial opportunity for various reasons, right? Not just to open up new revenue streams, but again, to use this as an opportunity to really drive innovation at pace and at scale across the organization, modernize your existing stack, change ways of working, develop new capabilities, and that. We have seen examples. So I've been working with one of the big banks in Brazil, for example, who saw this as an opportunity to develop new types of service, because their view was, hey, we've invested a ton of money into the development of a brand new modern banking platform. And instead of just using that for our own consumption, how do we effectively turn that, and this is where you get into embedded finance, banking as a service territory, but how do you use this as an opportunity to open up new revenue streams for the organization? And I do think that when you look at some of the use cases that are highlighted later on, KYC as a service, consent management as a service, I think you could argue whether or not banks are best placed to do that, but I think in some cases banks should be best placed to provide that as a service, right? As opposed to fintechs providing those types of solutions as a service. And I think if you were doing a really interesting piece of work with one of the biggest banks around the world at the moment around as a service business models. And one of the things that that they've started looking at is how do we effectively create some sort of bank of APIs, right? So how do you effectively APIify, if that's even a word, the entire organization? Right? So as part of their move towards microservices architecture and then how do you develop a set of APIs? And you're going to have to provide a bunch of basic APIs from a regulatory perspective anyways. But then how do you create more data rich? Because ultimately what an API is just a data load, right? That goes from A to B. But how do you sort of enrich that? And you can then start to charge customers for those types of services. Right? So I think there are some really, really exciting opportunities.
Thanks, Jeff. And we've seen some banks across the world already doing this. My favorite example is BBVA. I'm not sure you guys have had a look at that. They really were very early in terms of their adoption of monetizing their infrastructure and their APIs. Now, Dimi, on that point, we know what's possible for banks now. Do the banks here in KSA see this as a threat or an opportunity?
To answer this question, I would say that what our key advantage and what we are building for, what we were built for, right, as an organization. We're very good in managing risks, should be, and we are very good in managing trust with our customers, should be, right? So based on these two principles, we build our business, right? And in terms of open banking, it seems to be that we have to explain our customers that they need to possess some bits of trust to some fintechs through the contest management, for example, right? But this is frightening us, I believe. Not BSF, I'm just telling you in general terms, right? And in terms of risk, it's also, I think, pretty scary thing for us to partner with a fintech who might compromise the trust which we the trust of our customers, which we provided through them to this specific fintech, for example, right? So I'm creating this example just to make an argument that to be successful, it should be like a tango, right? You need two partners to understand each other. You need to understand what capabilities this fintech might bring to your customers. You might think that bank would like to hear more about opportunities on the business side, on the brand side maybe, on other aspects, how we can create value. And in this respect, I would think that it might be a very good opportunity for co-creation, new business models, for co-creation of new services. But if we avoid that, if it'll be always regulatory-driven approach, I'm afraid banks will take a step aside and will not support. That's my personal opinion. And I like that, yeah, there are some markets like the United States where it was driven by banks from the banking community, right? This is an amazing example, but we know that U.S. economy is so competitive, right? So it's so advanced, but other markets might not be so competitive, might not so be advanced, and that's why fintechs, I believe, might need to explain more and to convince us as a community to contribute more resources, time in this topic.
Thanks, Timmy. And do you want to counter that?
Yeah, just make a quick comment. So, I don't believe that the UAE as a market-driven open banking environment or the US as a market-driven open banking environment is actually a fair term. They do have solutions that are using account information from banks where fintechs have done a direct integration, but there's no open banking in that. It's a fintech and a bank working together. That's not open banking. Open banking is where you have a common set of standards that all of the banks are using, that all the fintechs can use, and that's open banking. And to call the UAE an market-driven open banking, I'm not picking on you, but I'm looking at you because you mentioned it in your thing, but it's just misguided. And if the US does decide to adopt a common standard, then that would be, I think, much better for the US because there's 8,000, there's so many banks in the US that aren't participating in that ecosystem because there's no common standards. And that the fintechs only have to go after, as you say, 3, 4, 5, and they get 80% of the market. But the rest of the ecosystem doesn't benefit from that. So that's the kind of the point I wanted to make.
Yeah, thanks, Mylon. And maybe Emma, over to you next. What do you think the challenges that are faced by the banks and the regulators, and cohesive global standards might be one of them that you choose to talk about? But what friction do you believe is in the way that could prevent open banking being adopted globally?
Yeah, I mean, it's a couple of things. I agree with Mylon somewhat, and I agree with Timmy as well. Partnerships between fintechs and banks are not necessarily what constitutes open banking. I think banks should definitely, I mean, if you look at collaboration today, or competition today, collaboration, in my opinion, is the new competition. So banks working with fintechs, obviously gets them to be able to deploy solutions a lot more quicker. But I also think it complicates things in terms of the strategy of the bank. Sorry. So what I mean by that is you'll have a lot of banks that have a certain strategic roadmap today. They've got their now, next, and later. And they'll sort of go with the current trend. So a lot of banks today, for example, if we're looking at, Saudi in particular today, are looking at building PFM solutions. Probably more than half the banks are building PFM solutions today. Why? Because you've got other fintechs in the market that are also building PFM solutions. Are they partnering with those PFM solutions? No, but they are partnering with other, perhaps, providers that, somewhat build some of that architecture of that solution that they're going to go out to market with. But then they start thinking about, okay, I'll go out to market, I'll embed this within my own PFM solution, but can I carve out a separate subsidiary that focuses on open banking and banking as a service? Can I carve out a separate application completely? Sort of like what Standard Chartered did with MOX. And then where does that get me? How can I monetize? They're all thinking about monetize. But at the same time, I don't see any banks at this stage really looking at creating something unique. They're still trying to build the foundational layer of that strategy. And then, going forward, in the next 3 to 5 to 7 years, they'll be deploying new solutions.
Thanks. So Mehdi, do you think that the uniformity that exists with the current implementation of open banking within the banks, the PFM point is a good one, will make it harder for banks to compete because we're actually all trying to implement the same thing, the same core use cases. What do you think the evolution of that will be? And which do you think will be the winning use case within open banking in the next 24 months?
Exactly. So first, I must disagree with what Mylan said. I generally think that open banking, that the way the UAE, an open market like the UAE and the US are actually open banking markets, both the UAE and the US, because essentially what is happening in both markets is that third-party applications have the right to consume banking data and have the right to consume banking payment rails, and that's the sort of the.
They have the opportunity on a one-to-one negotiation.
That's the bigger topic, is the legality of that action. But so far, I believe that it hasn't been proven wrong in either markets, and so this is why I think it's a real opportunity for the banks, is to go sort of beyond of what's mandated, right? If you look at the Saudi standards, it's probably the best open banking standards. We've done a study of all the open banking regulated markets, and the Saudi standards are the more encompassing. They cover the most use cases, and even the user flow is by far sort of the most, the best user flow sort of that we'll see. But in the UK, for example, identity is not one of the not one of the APIs that is mandated. So what we've seen is a lot of open banking platforms striking direct partnerships with these financial institutions to provide better KYC and onboarding. But still, I still do believe that this is very much within the AIS, PIS sort of open banking standards. It's maybe going a little bit further with identity, but it's broadly open banking. Within the banking as a service space, I think there's a lot of opportunities for banks. I was catching up with one of our clients in the UAE just last week, a BNPL solution. And in this part of the world, BNPL are seeing faster growth than any other parts in the world. And they were sharing with me that they actually, as of last month, issued more cards than any bank in the UAE. A BNPL, a new fintech player that has been around for about 5 years, has issued more cards, prepaid cards, than any bank has issued credit cards. And what we've seen here is, and their partner bank on the back end see them as a distribution channel, right? I think the real opportunity for banks is to see that fintechs can be a distribution channel, they can be a partner. And if they look at, broadly, there's a lot of studies that show that a customer acquisition cost for a bank varies between $100 to $200. Other studies globally show that the acquisition cost through banking as a service varies somewhere between $5 to $35. And if banks move away from the mindset of saying, oh, we're going to lose a direct relationship with the customer, and say, actually, we have better unit economics by partnering with fintechs, by having better reach and cheaper onboarding, then I think we'll see a lot of these use cases, such as account issuance, such as card issuance, or even lending as a service. And I think there's a huge market out there for these solutions.
Thanks, Mehdi. We have a buy now, pay later fintech startup in the room who just got very excited by the data that you were reading off. Yeah, please.
So it's a great point. I think banks are sort of still deliberating what approach to take, whether it's being sort of direct to consumer or whether it's the whole distribution ecosystem model that we're seeing today. One of the points that I want to highlight as well is, as the market stands today, we, all of us sitting here, the banks, the fintechs, we're market makers, right? We're creating this market here. The regulatory standards are being implemented. we're all going to be going through sort of that guinea pig testing phase with a lot of these processes, a lot of these user experiences, a lot of these use cases. What will end up happening eventually is there'll be the market breakers. So fintechs that maybe even come from abroad or fintechs that start setting up here, once everything has been solidified from a user journey and from a regulatory perspective. Some guy, some fintech, maybe lean company, 10, 15 employees, comes in with an income verification API, works with a couple of BNPLs, has a great cost profit model, generates millions in revenue, and then takes that opportunity from those that were here in the beginning.
Thanks, Ahmed. So we've only got a few minutes left because we want to do a Q&A in case any of you have any questions. But before we go to Q&A, just within 2 or 3 words from each of the panelists, what do you think the next trend within fintech, banking, and technology will be when we've moved on from open banking? Jeff, why don't we start with you?
Well, having just published a report on embedded finance, and given the amount of work that we're doing in this space with clients around the world, I fundamentally believe that embedded finance is completely going to change the financial services industry, and I'm 100% convinced that if you're a small business, for example, in a couple of years from now, you will no longer go to your bank. If you're looking to take out a loan, you go to your software provider or platform of choice. We're already spending significant amounts of time. And at the moment, we expect this to be a $7 trillion industry. That's just in the US alone. That's transaction value, by the way. And so we spoke to over 50 of the leading embedded finance players in this space. I wrote a report together with Matt Harris at Bain Capital Ventures, who some of you will know, who coined the term embedded finance. And we're seeing a lot of funding flowing into a variety of embedded finance players around the world. We see banks really doubling down on embedded finance. You're really trying to figure out where to play and how to win. So I know this is a bit more than 2 words, but it's hard to explain this without sticking to 2 words. But for me, and again, we can talk about lots of exciting trends, but if I had to pick one, and again, just based on the number of work that we're doing in this space and the excitement that we are seeing, also on the investor side, I would pick embedded finance.
And if anyone's interested in paying Bain for some consulting around embedded finance, then meet Jeff afterwards.
Always happy to speak to people.
Dimi, how about you?
What I would say that the trend will be around technological agility. Just in order to generate these wonderful products which you are mentioning, it's embedded finance, might be lending for SME, because as a community, I think we undermine SME as a sector, I believe, right? So, and there is huge potential. But in order to provide these wonderful products, you need to be agile in terms of creating very fast new products, test, learn, fail, test, learn, fail, and you need infrastructure, you need technologies. That's, I think, the major trend.
Thanks. Emil?
On the embedded finance piece of it, that's really where I think it's going to end up evolving to. So I completely echo, what Jeff said earlier. If you look at even some of the inquiries that come from some of our clients today, be it those that are in the airline industry or those that are in the retail industry, like major retail conglomerates, open banking, open finance, embedded finance doesn't necessarily apply just to the financial sector. So you can have some of these big loyalty applications that actually access customer accounts to be able to run multiple different types of loyalty programs, buy now, pay later initiatives, things like that.
Thank you. Marty?
So firstly, just the one thing that I'm very, very excited about in Saudi is that most of the banks are much more ready to adopt banking as a service. I think all of us, our answer is around banking as a service. Most of the banks are much more ready than most of the other countries in the region. So that's the part that I'm very excited about. And in a country where the population is highly banked, I think, and where the end user's loyalty to any financial institution is not very high, I think that the banking as a service will be a huge distribution channel in this country. I think people don't mind having 30, 40 financial services that they interact with on a daily basis. Fintech services will be unbundled. And I think what's going to be very interesting is seeing banks partner with fintechs that are very much complementary to their solution. We'll see naturally sort of the smaller banks partnering on account issuance, on account opening, because they want to get market share. And you'll see the bigger banks partnering on lending as a service, for example, because they have better rates. And this will naturally play out, but I think this market is very much ripe for open banking firstly, but very, very quickly thereafter is banking as a service.
Perfect, thank you. And finally, Mylon.
Yeah, so I think the next big thing is going to be the revival of crypto. I think FTX is going to come back. Sorry, no. So really, I think I fully agree with pretty much with everything except for Dimi, everything that's been said. But it's really what's next. You can't say what's the next big thing other than that the all open banking as a catalyst, banking as service coming on the back of that because it's an infrastructure play, but it's really the future of banking. It's the paradigm shift of banking towards digital, and that's the evolution that we're all going through. How that evolves for each bank is going to be different because each bank has a different kind of core set of capabilities, and in some cases. There'll be opportunity for growth through partnerships in particular sectors, and there'll be opportunities for improvement of process of management of services in other parts of the bank. So, but it's really just about that evolutionary step that banks are making globally, but here in the kingdom as well, to becoming digital banks. That's really where I think at a high level that's where we're at.
I don't know whether I should be happy or sad that no one mentioned the metaverse. I was expecting at least one of us to mention it, but I think Milo makes an excellent point, man. And in general, if you look across the banking industry, you're seeing this this fundamental shift. And again, as I said to you before, for someone who spent his entire career in financial services, I honestly think there's never been a more exciting time to work in financial services because the pace of change that we're seeing today, from a regulatory perspective, from a technology perspective, in terms of consumer demands that are changing, is unlike anything that we've ever seen before. And I think more broadly, banks historically have been very reactive. I mean, how good are banks at really helping you manage your financial lives? Right? They're not. Right? So the shift that we're seeing from reactive to proactive to predictive, I think is another thing that I'm personally really, really excited about.
Thanks, Jeff. So we're very keen for you to enjoy BSF's hospitality and help yourself to some food, which is at the back of the room, and we can start some networking and meet everybody individually. So, but before we do that, we probably have time for one or two questions, if there are any from the floor. Somebody will run a microphone down to you. Or you can have mine. Please let us know who you are and where you work.
This is Iyas Al-Malki with you. My question is for Mr. Milon. From your point of view, I would like to know what's the 3 suggestions you would suggest for the open banking to be to involve in Saudi Arabia and to take the lead. So we can, what I mean to say is to be the leader in this field. What are the 3 suggestions would you suggest from your point of view?
So let me just for the kingdom to become the leader in open banking within the region or globally. Globally.
We are aiming always globally.
I think you have to put me at the top of open banking for the kingdom. No. The 3 things that I think we could do. Well, so the open banking program itself, being derived from SAMA, that if one wanted to do more, I'm not being critical of the SAMA and SAMA open banking team, but they could expand their remit and move more quickly. So, for example, we've now had the AIS regulatory framework November 1st. There's no clear date, and they might tell me tomorrow because we have a meeting, but there's no clear date on when PIS regulatory standards will come through. So if one wanted to grow more quickly and become more expansive, then that would be one key step. I think the other is what we were discussing before, which is that full market communication, because if you want to become number one, you need to have a very strong adoption. The strong adoption will only come on the back of very strong communication, and so on. And then some of the other things around the speed of that you can bring fintechs into the market. So there's a few key challenges for fintechs to come into the market, but there's also key challenges with the regulator in terms of speeding up the process for regulatory approval. So those are kind of key elements, all of which are on SAMA, I'm afraid to say, but that's putting that whole process on a much faster, more robust path would put the kingdom on a much stronger footing within the region as well as globally.
Thank you so much.
Hello, Mr. Milan. First of all, good afternoon. How are you doing? Doing well. My question is, first of all, introduce myself. My name is Abdul Rashid. I have worked in banking sector and airline sector. The point is, we have a new player in credit cards. I have been experiencing with MasterCard, Visa, and American. I have all the training in those courses. Now you have UnionPay and Merge, the Russian new player. Is those credit players that affect the open banking in the future? Before they are only monopolizing the credit cards for the US market, only the US players. Now it's become the Chinese and Russians and maybe become Indian and South African. Do you think those countries they will play a strong element to open the process of the opening banking in the future?
Sorry, was that directed for me?
Yes.
Yeah. Do I think that the card schemes and the different flavors of card schemes will impact open banking? Yes, they are already. If you look at the card schemes, particularly MasterCard and Visa, whom recognize that real-time payment infrastructure on a global basis is a threat to credit card transactions, because you can then support account-to-account payments in real time across border. That's a natural threat to cards, so therefore they're investing heavily in open banking and real-time payment infrastructure. So that then becomes, those real-time payment infrastructures then become a core component of open banking and the payment initiation services. So it does, in a circumventional way, impact open banking. Will the cards themselves and card usage impact open banking directly? No. Should cards become a component of an open banking PIS capability? Potentially. It depends on how that's developed. One of the key issues around PIS is the cost infrastructure about pushing through real-time payments. In certain markets, the banks are forced to absorb the cost of those payments and aren't able to charge for them. Not saying that that's what's going to happen in the kingdom. I think one of the major benefits that we have here in the kingdom is that the impetus for creating open banking infrastructure here is pro-market, and it's pro-customer, it's pro-fintech, and it's pro-bank. Whereas when open banking originated in Europe, it was more on the back of the financial crisis, and it was about changing the market infrastructure and not pro-bank in that case. So we have opportunities to develop and not to lose money necessarily, although at this point it's been a cost base, which I'm grateful to our corporate team for paying for my services.
Thanks, Mylon. One final question before we have to wrap up, unfortunately. I'll go over here, make it a good one.
Hi, this is Kanan from Benfica. It's not a question, but it's just setting the real expectation. So open banking will certainly enable many things, but it's overhyped in the way because there is no killer use cases that could make trillions or millions, okay, if it was not already solved before open banking, right? So if you say this is a use case only because of open banking, we can make billions, that use case would have been already solved. So it's only the data sharing has been streamlined for market participation with the help of open banking. So open banking is not going to change the world overnight, okay? It hasn't changed the world in UK for the last 6 years, for 5 years. We have only 6 million transactions or 7 million transactions. And one of the, in Jeff's slide, I saw one of the major aggregator. They are the biggest one in UK. They made 3 million revenue last year, and they had been burning 35 million pounds 1 year, okay? So the money, the monetization will trickle in and it will then create a bigger impact, but not like make a money overnight. So that's why I felt it's overhyped.
Yeah, so you're right, but the people, and I'll hand the microphone over, but the people who are making quick money, let's say, relatively speaking, are Tink, our TrueLayer, our lean technologies, our terabit gateway in the future here. So it's the infrastructure plays that players that are getting the most out of open banking. That's true, and I'll hand over to somebody else on the rest of your comment.
But that quick money player, one of the players you mentioned, that's the player I'm referring to. They haven't made money.
They don't make money, but their valuation is extreme. All right.
So adoption in the UK wasn't as high as some might have expected, but I would also point to the fact that Plaid has reached more than half of the population in the US, that some of the largest unicorns are built on the Plaid infrastructure, on the open banking infrastructure that Plaid has enabled. So from Ireland, it's not open banking. According to me, it is open banking. But the reality is, open banking has enabled a lot of the emergence of these new fintech services in the US. In terms of like cost savings, it is true that infrastructure players make money, but I would point to the fact also that in remittances, for example, right? Biggest, the UAE and Saudi are amongst the biggest remittance markets in the world. Collectively, the Middle East is the #1 market in the world. If we look at remittances, today, if we take an example of, very simply, if there are billions of dollars flowing out of the region every month, those are businesses that operate on very, very tight margins. Meaning that, again, a remittance, most of the time, cannot bear the cost of the transaction. If you look at players like Wise, if you look at players like HubPay, those provide almost free services to the remittance to their end users. And from their end users, which are the real beneficiaries of open banking, in my opinion, because if you take the cost of card, 1%, applied to a $10 billion remittance market, we've now saved $100 million by saving that extra 1% that end users would pay on that transaction, right? So just to put things in perspective, there's $43 billion of remittances coming out of the UAE every year,
So you're assuming that if you go from a card transaction at 1% to an account-to-account transaction basis, that you're really going to reduce the cost, and that cost savings would be passed on to the consumer.
The card fees for most fintech services, right? The card fees is passed on to the end users.
But if there was a reduction in cost, do you not think that the company providing the service would just take more margin?
More money for everyone.
But your premise going to be better for the fintech who's providing the service, not for the consumer.
Well, those fintechs compete on different grounds, right? A company like Wise obviously reinvented the remittance market. They're primarily sort of operating on the premise that they have better nodes, so that they have a sending and receiving market, and that they have banking infrastructure in both markets, and therefore they're able to save a lot in fees by not passing money to the likes of Western Union or MoneyGram, right, on to those markets. So I think they bring a lot more efficiency. I think they reduce the overall margins of those industries. Of course, they make money in the process, but I think the value of that transaction is still saved. A big portion is saved by the end user.
Okay, the final point before we wrap up, please.
Just real quick. So respectfully, I would like to disagree with one of the points you mentioned on regarding, if banks were able to create such a use case, they would have by now. I mean, if you look at personal consumption expenditures in Saudi alone today, it's crossing $310 billion. So there's a huge, there's a lot of opportunity, there's a lot of potential to generate revenue, not just from your basic topping up or your basic remittance use case. There's also bulk and batch, one-to-many payouts, dynamic payouts, all kinds of things that open banking can support. And as far as the local players go in terms of generating revenue, they are generating revenue. So Mahdi here, he has deep pockets. He's making a lot of money today processing money. And at Tarabat as well, we're supporting 15 banks with their infrastructure across the regions that we're operating in today.
Perfect. Thank you for the questions, everybody, and thank you to the panelists for an interesting discussion. So that concludes the session tonight. Thank you to Fintech Saudi. Thank you to the BSF security team, the marketing team, the IT team, the events team for helping us facilitate this evening. It's great to have you all here. We're going to stick around to meet you all and have a coffee, have some food with you, so please stick around. Thank you for coming, and you're always welcome back at BSF. Thank you, everyone. Thank you.